Did you ever wonder how the Brazilian economy evolved over more than 5 centuries to become one of the largest economies in the world? Let's take a moment to journey back in time and explore this fascinating trajectory. Our story begins in the early 1500s with the extraction period, when the Portuguese first set foot on Brazilian soil. The economy was centered around the extraction of Brazil wood and other natural resources, turning the country into a colony of exploitation for European gain. As we move into the 17th century, we see a shift to the sugar economy. Sugar production becomes the backbone of the Brazilian economy, with large plantations and sugar mills dotting the landscape. However, this economic model heavily relied on African slave labor, leading to a highly unequal society. Fast forward to the 18th century and we find ourselves in the coffee cycle. The decline of sugar was met with the rise of coffee, propelling Brazil to become the world's largest coffee producer. Again, this boom was built on the back of slave labor, a practice that only ended in 1888, forcing the economy to adapt. The 20th century welcomed an era of industrialization. Starting in the 1930s under Getúlio Vargas's government, Brazil began to invest in industries, sparking significant growth. Yet the dependency on commodities like coffee persisted. The military dictatorship from 1964 to 1985 also played a role, driving economic growth but at high social and political costs. From the 1980s onward, we enter the era of agribusiness and globalization. Brazil diversified its economy, focusing on agriculture and the export of commodities like soybeans and meat. Economic liberalization and reforms in the 1990s opened the country to foreign investments and global trade. This era brought growth, but not without challenges such as persistent inequality and environmental issues. That's a quick look at the historical journey of the Brazilian economy. What lies ahead, you ask? Stay tuned as we delve into the Brazilian economic miracle of the 1970s, the policy of large-scale public works, increasing indebtedness, and the advancements and setbacks during the 20-year rule of the Workers' Party. Let's rewind to the 1970s, a time of remarkable economic growth known as the Brazilian economic miracle. This era, under the helm of President Emílio Garrastazu Medici, was a pivotal point in Brazil's economic history. The government adopted a policy of state-led development. This policy was a catalyst, fueling an expansion in the industrial sector and a surge in exports. For the first time in its history, Brazil's economy was growing at an unprecedented pace. The country was not only catching up with the developed world, but was also becoming a major player on the global economic stage. One of the key strategies during this period was the implementation of large-scale infrastructure projects. Highways were built to connect remote regions of the country. Dams were constructed to harness the power of Brazil's vast rivers, providing a reliable source of electricity. Nuclear power plants were erected, signaling Brazil's arrival as a modern industrial nation. These projects created jobs, stimulated economic activity, and laid the foundation for Brazil's future growth. But this rapid growth was not without its challenges. The government, eager to maintain the momentum, began borrowing heavily to finance these projects. This led to an increase in public debt, creating a financial burden that future generations would have to bear. The Brazilian economic miracle also had its social implications. While the industrial sector boomed, the agricultural sector lagged. This led to an increasing disparity between the urban and rural populations, exacerbating Brazil's already serious problem of income inequality. But despite these challenges, the 1970s were a transformative period for Brazil. The country's economy grew at an astonishing rate, and Brazil emerged as a significant global economic player. It was a time of progress and optimism, but beneath the surface, there were signs of trouble brewing. So, the 70s were a time of rapid growth, but was it sustainable? Fast forward to the 21st century, the era of the Workers' Party rule. This period witnessed some impressive strides in economic development, but also encountered several stumbling blocks. Under the Workers' Party's reign, which spanned 2 decades, from 2003 to 2016, Brazil experienced a significant reduction in poverty levels and an increase in social inclusion. The party implemented several progressive policies, including the Bolsa Família program, which provided financial aid to poor families. This move was a significant advancement, lifting millions out of poverty and stimulating the economy by boosting consumption. However, the era wasn't without its challenges. The Workers' Party's rule was marred by allegations of corruption, leading to political instability. This instability had a detrimental impact on the economy, leading to a significant recession between 2014 to 2016. The GDP declined by nearly 8% during this period, marking one of the worst recessions in the country's history. Another setback was the over-reliance on commodity exports, especially during the commodity boom in the first decade of the 21st century. When global commodity prices fell, Brazil's economy took a hit, revealing the vulnerability of its economic structure. Moreover, the Workers' Party's rule saw an increase in public spending, leading to a high fiscal deficit. This deficit was exacerbated by the economic recession and resulted in a rapid increase in public debt. By the end of 2016, Brazil's public debt had soared to nearly 70% of its GDP, a significant increase from the 48% at the start of the Workers' Party's rule. In sum, under the Workers' Party, Brazil made some substantial advancements, particularly in terms of social inclusion and poverty reduction. However, the period was also fraught with setbacks, including political instability, an over-reliance on commodities, and a rise in public debt. The Workers' Party rule brought about significant changes, but not without its share of setbacks. Now let's bring our economic time machine to a halt and take a look at the Brazilian economy in 2023. The Brazilian economy today is a complex blend of challenges and opportunities. On the one hand, we see a country grappling with high public debt, political instability, and the lingering effects of the COVID-19 pandemic. The public debt is a pressing concern, with the government struggling to balance the need for social spending with the necessity of fiscal responsibility. Political instability, too, presents a significant challenge. The fallout from the downfall of key political figures, such as Bolsonaro's ally Pedro Guimarães, has cast a shadow over the political landscape, potentially impacting economic decision-making and investor confidence. The COVID-19 pandemic, like in many countries, has left a significant mark on Brazil's economy. This health crisis brought to the fore the importance of robust public health systems, and its economic reverberations continue to be felt. But it's not all gloom and doom. Despite these challenges, Brazil boasts a diversified economy with a robust agricultural sector and growing industries. The privatization of the power company, Eletrobras, set to be the largest in the country's history, signals a move towards more private sector involvement. This move could potentially unlock vast economic potential and set the stage for future growth. Moreover, Brazil's substantial domestic consumer market offers a solid base for economic resilience. With a population of over 200 million people, the demand for goods and services within the country is significant. Finally, let's not overlook the role of small and medium enterprises, which are now receiving increased attention from state-controlled banks. This shift in focus acknowledges the vital role that these businesses play in driving economic growth and job creation. With all these factors at play, what does this mean for potential investors? If you're an investor eyeing Brazil, what should you be aware of? This is a question that needs careful consideration. The Brazilian economy, with its rich history and resilient nature, offers a plethora of opportunities. Yet, like any market, it comes with its own set of risks. Brazil's diversified economy is one of its biggest strengths, offering investors a broad array of sectors to explore. It is a global player in agribusiness, boasting a robust agricultural sector that exports commodities like soybeans and meat. Coupled with a substantial domestic consumer market, this presents a fertile ground for investors seeking to tap into the country's economic potential. Brazil's industrial sector is also on an upward trajectory. The country's journey from focusing on commodities to investing in industrialization has led to substantial growth. This growth, although challenged by the country's historical dependency on commodities, has opened up new avenues for investment in various industries. Perhaps the most attractive aspect of the Brazilian economy is its resilience. Despite facing economic challenges such as high public debt and the impact of the COVID-19 pandemic, Brazil has managed to maintain a diversified and robust economy. This resilience is a testament to the country's economic potential and its capacity to weather storms. However, it's crucial to remember that investing in Brazil also entails navigating its political and economic landscape, which comes with its own set of risks. Political instability, for instance, can have far-reaching impacts on the economy. The recent scandal involving a political ally of President Bolsonaro and the potential implications for the upcoming elections are examples of how political developments can influence the economic climate. Economic risks, such as high public debt, are also factors to consider. The Brazilian government's historical policy of large-scale public works and increasing indebtedness has implications for the country's fiscal stability. Investors need to be mindful of these risks and consider the potential impact on their investment decisions. Investing in Brazil, like any market, is a balance of risks and rewards. It's about understanding the opportunities that the Brazilian economy presents while also being aware of the challenges. With careful analysis and strategic decision-making, investors can tap into Brazil's economic potential while navigating its risks. What lies ahead for the Brazilian economy? The future of Brazil's economy hinges on several key areas. Firstly, the privatization of public assets, like the power company Eletrobras, that could drive significant revenue for the government. This largest privatization in the country's history is expected to raise upwards of $20 billion, with the initial share sale alone estimated to bring in around $5 billion. The Brazilian government also sees potential in small and medium enterprises, or SMEs. Both the current administration and potential future leaders recognize the importance of lending to SMEs. State-controlled banks have already increased lending to these enterprises, and this trend is expected to continue. Infrastructure financing is another area of focus. The Brazilian Development Bank, BNDES, could use its own capital for projects where there's no private sector interest. There are investment gaps in areas like transportation, sanitation, and urban mobility that could be addressed through infrastructure projects. However, without ignoring the potential, we must also consider the challenges. Brazil faces political instability and a high public debt. The handling of the COVID-19 pandemic has also raised concerns. The downfall of political allies and the loss of support among key voter bases could impact the future leadership and, by extension, the economic policies of the country. Moreover, any future economic trajectory must address persistent inequality and environmental issues. These are not just moral imperatives, but also economic ones. Addressing these challenges is key to ensuring the long-term health and stability of the Brazilian economy. Brazil's economic future also lies in its ability to continue diversifying its economy. The country has already shown its capacity to shift from a commodity-dependent economy to one that embraces a variety of sectors. This ability to adapt will be crucial in navigating the future. As we've seen, the Brazilian economy has weathered many storms. With effective management and the right reforms, it has the potential to continue attracting investments and strengthening its economy in the future. So, we've taken quite a journey through the Brazilian economy, haven't we? We've traveled through 5 centuries, witnessing the evolution from extraction to agribusiness and globalization. We've seen how the economy has shifted from the exploitation of natural resources like Brazil wood and sugar to a diversified marketplace with a robust agricultural sector and growing industries. We dove into the Brazilian economic miracle of the 1970s, an era of remarkable growth driven by industrial expansion and a surge in exports. We also examined the challenges that have arisen, such as high public debt, political instability, and the impact of the COVID-19 pandemic. And yet, despite these challenges, Brazil's economy remains resilient. Looking forward, the nation continues to be an attractive location for investments, offering a substantial domestic consumer market. But remember, it's crucial to consider the political and economic risks that persist. As we've seen, Brazil's economy has the potential to continue attracting investments and strengthening, given effective management and structural reforms. Despite its challenges, the Brazilian economy remains resilient and diversified, making it an intriguing prospect for investors. But as always, it's important to keep an eye on the economic and political landscape. Thanks for joining us on this journey through the Brazilian economy. Until next time. Next.